And so first of all, welcome. Thank you very much. And I think it's fair to say that we can go ahead. Gentlemen, I think you can turn on your mics. So you want to introduce yourselves? Wayne, are you starting? Hi, Wayne.
Hi, Diana. Can you hear me?
Yes, you can.
Perfect.
Okay.
Nice.
So
all right, well,
go ahead.
All right. Well, thanks, Diana and Heba and CBC, Dubai and Abu Dhabi, and everyone for joining us. I hope you're ready for another exciting topic of tax. Yeah, as a lot of you may have seen some of the presentations we've done, Trowbridge and myself have been presenting in the region since 2006, and we've been presenting with the CBC in Dubai and Abu Dhabi every year since 2007. So the webinar is a great way of doing it. I do enjoy going there as well, so hopefully I can continue that. But we do have a lot of experience in the region, having presented there every year since 2007. And so we really just wanted to give an update on sort of things that are happening. We'll talk a little bit about some COVID developments, but those are mostly related to, people living in Canada. So but what I want to do is we've been getting a lot of questions about tax residency and what happens if people have to move back because of this. What happens if people are stuck in Canada for a long time and they spend, say, more than 183 days? And what happens if they're working in Canada, although their employer is abroad? So I think most of it'll be focused a bit on that. And so yes, as Diana mentioned, my name is Wayne Bewick. I'm a partner with Trowbridge. We've been around for about 18 years now, and our main focus, mine anyways, is expatriate tax, just dealing with Canadians that live around the world. We also have a corporate tax group that deals with companies that go into Canada or come out of Canada. We have a global mobility group that Ernie will talk about for helping companies who move employers around the world or employees around the world. And we also do a lot of US tax as well, just because US citizens are taxed on their worldwide income. So we have a lot of help with that. We have offices in Toronto, Vancouver, Frankfurt, London, and then Ahmedabad. One thing that we're happy to report is we have 85 employees, and 100% of them right now are able to work remotely. So things are moving. They're not as efficient as they might be with most people in an office, but we're fortunate to be able to be working remotely. That's one thing that you may want to check with if you do have accountants, that they're able to get things done. Sometimes if accountants aren't on the cloud, then they may not be able to get things moving. Now that kind of leads us into our first topic in regards to the updates on the filing deadlines. Fortunately, the CRA has realized that things aren't moving as fast as they would have in the past. So they've extended the personal tax filing deadline to June 1st from April 30th. So we have an extra month to get your taxes in. So that means if you moved out of Canada last year, if you're living in Canada or you're still filing as a Canadian resident, or if you move back to Canada in 2019, your return is now due June 1st instead of April 30th. So there's a bit of a deadline, so that's good. For us tax preparers, we actually quite enjoyed April 30th because you can get everything done by then, and then you don't have to work late when the weather's getting nice, but this is definitely a different year. For self-employed individuals, it's the same deadline. The deadline is always June 15th, so self-employed individuals still have that June 15th deadline. For Canadian corporate filers, there's been an extension as well, depending on when your year end is. For anyone with trust filing deadlines, there's been an extension for a month as well. And then for those with rental properties in Canada who have to file an NR4, which is basically a form that summarizes what happened during the year from a rental perspective, that is normally due March 31st, but that's been extended to May 1st as well. So there's been some extensions there. I think the US extended the deadline for 3 months, so it'll be interesting to see how long this lockdown goes for and if there's any feedback as to whether the filing deadlines get extended. The strange thing is that payments are only due September 1st now. So normally when your tax return would be due April 30th and your payment would be due April 30th. Now the return is due June 1st, but payments are only due September 1st. I don't know why they didn't extend both, but if you're struggling to pay, or if you want to delay your payment, it is now only due September 1st. And if you also had some installments, like if you have to pay quarterly, your June 15th payment, that has also been extended to September 1st. So there's some extensions of payment to try to keep money in people's hands for as long as possible. Self-employed individuals, they have the same payment dates as regular individuals. Corporate tax payments have been extended as well, as have trust returns. Unfortunately, for people that have rental properties, the rental payments, or the tax on the rental payments, if you're doing the gross method, those are still due the 15th of the month after the month you receive the payment. So there's been no extension on those payments. So some government incentives, again, this really only affects people residing in Canada. Now, whether you're actually a Canadian resident for tax purposes and not residing in Canada, we haven't seen how that would benefit. Supposedly, I guess if you are paying taxes, then you should likely benefit, but that's still something that would need to be clarified. The CREB, which is the emergency response benefit, gives individuals who have lost employment or because of this, $500 a week or $2,000 a month up to 16 months. Or up to 16 weeks. Now, so that's about that is $2,000 a month. And the funny thing about this $2,000 is the government's actually taxing it, but they aren't withholding any tax on that. So if you do get that payment of $8,000, please be aware that there may be some tax due next year when you include that on your return. There's also been some other benefits, and again, these are for Canadian residents for tax purposes or people that are receiving these benefits. There's been an increase in the child tax benefit. This will be automatic. You don't need to do anything about it. Also for the special goods and service tax credit, again, you don't need anything to do about that. And there's some mortgage assistance where individuals will qualify to be able to delay payments on mortgages under specific situations. So again, I'm not going to go into it too much because it doesn't really affect people that are living abroad, but there are some government incentives that will happen. Now, the key thing that people are concerned about is, residency for tax purposes, and what happens if I lose my job or I have to come back to Canada because of COVID or something like that. Now, this is a little bit reminiscent of sort of the economic crisis of 2008, and I'll give an example. So back in 2008, we had a lawyer from Canada move to Dubai, and he was only in Dubai for 8 months. The economic crisis came, and he lost his job. I think he had a month or two there left before he had to leave because his visa expired because it was tied to his employment, and he had to come back to Canada. But because when he left Canada, he had no set intention to come back, we were able to treat him as a non-resident for an 8-month period because it was a factor that was out of his control. And so if you're in a situation where you lose your job or you have to move back for some other reason related to this, then, if you met all the other non-resident criteria, then irrespective of the time you were abroad, we could still treat you as a non-resident and it shouldn't affect you coming back. So again, that's a major concern. Now, if you're only back for a short term, or if you're stuck over here, you want to make sure that you don't do something that will make you a factual resident. So, if you came over here because of this and you're here 3-4 months, if you start getting things like healthcare, opening up bank accounts, doing credit cards, getting a long-term lease, or something like that, then you can be seen as a factual resident of Canada. So, you're going to want to make sure that if you are back in Canada because of this, that you try to ensure that you keep your residential ties to Canada at a minimum. So you'll want to make sure you don't become a factual resident. The other thing that we're seeing is, and this is happening in lots of digital nomads or something like that, where people are coming back to Canada and what happens if they have to spend a bunch of time in Canada. So, you know, if this goes on for another month or two and you spend 3 months here and then you normally spend the summer here, you need to be careful of something that's called the Sojourner Rule. And so if you spend more than 183 days in Canada in the year, you're considered a deemed resident under the Sojourner Rules. And that would mean you'd be taxable on your worldwide income. So if you were working in the UAE in January, February, came back, spent 7 months in Canada, and then went back for the last few months of the year, the income earned in January and February and the end of the year would be taxable in Canada in that year because you'd be considered a deemed resident. So in this instant, it's important to consider the amount of time and to monitor the amount of time you're spending in Canada to not be considered a resident under the Sojourner Rules. There's also another incident or another instance that we're seeing a lot of, and Ernie's going to talk more about that, is what happens if you're back in Canada and now you're working for a foreign company, but you're getting paid in Canada. And there's some tax implications around that that Ernie will talk about. So when I talk about the Sojourner Rule, just in case there's people from other countries, that really is specific to non-treaty countries. Because if you come, say you're in a European country and you come to Canada and you're here 200 days, but your main residency is in another European country or a country that Canada has a tax treaty with, we could still treat you as a non-resident of Canada because of the treaty. However, the UAE-Canada tax treaty doesn't really work because to qualify, you have to be an Emirati. So we can't rely on the tax treaty to treat you as a deemed non-resident. So that's why making sure you don't have a lot of ties where you might be considered a factual resident and not spending more than 183 days in Canada in the year, if possible, are a lot more important. Now, if you do have to come back to Canada because of this, then typically from the day you get back, you'll be considered a resident of Canada for tax purposes. Now, where this could cause some problems are where people have come back in, say, March, and then they don't end up going back, or they get severed, they get let go from their job, and they get severance payment while considered a resident of Canada for tax purposes, as that payment would be taxable in Canada. So to the extent you know, that happens, you may want to see if you can extend your residency in the UAE to avoid that. So there's certain instances where people being back in Canada can have some negative implications. So you want to watch out for things like that. But otherwise, when you get back, you will need to file an arrival return to get yourself back into the Canadian tax system. If you have foreign assets, you'll need to include those on that return, and then you'll be taxed on your worldwide income from the day you come back. So those are really the kind of the key updates that I really just wanted to talk about. Happy to take further questions on residency or anything else at the end. Ernie, do you want to take over?
Thank you, Wayne. So I just want to cover a little bit regarding global mobility issues, just to re-highlight what Wayne had spoken about before. My specialty area is employers that relocate employees around the world and from other countries into Canada. So I'm going to talk a little bit about not only the tax considerations, but also some of the payroll reporting and withholding requirements. So back to Wayne's example, we will likely see quite a bit of this, and already have seen some, where foreign employers are requesting their employees to work from home, from wherever their home country is. So if, for example, you were working in the UAE and you chose or were asked to come back to Canada, and you're spending time either at a former residence or maybe a family member's residence here in Canada, if you're working in Canada, then technically you're subject to tax on those work days. So if, back to the example Wayne was giving, if let's say this lockdown period lasts for say 3 months, and you work from Canada for 3 months, you will have a filing requirement, and assuming that you don't establish other ties, then you would have to file a Canadian non-resident return for the 3 months worth of income that you've earned from here. Now, technically speaking, your foreign employer also has a payroll reporting and withholding requirement. So they would have to technically run a payroll for you, report your income for the 3 months, and then have a T4 generated for that period of time. So that can raise some concerns to companies that don't have operations in Canada, but now have this additional reporting and withholding requirement. If, let's say, you were seconded for that short-term period to a Canadian entity, then the Canadian entity of the company, if they have one, would then need to meet those payroll reporting and withholding obligations. So again, this can cause some complexity given the fact that you might have to now work remotely from a location in Canada. A real life example, this has come up actually twice now in the past week. We've been asked to get on calls with foreign companies or Canadian companies that have employees that were visiting other countries or maybe on business trips and are now required to stay there. They're in lockdown. So we dealt with an issue where a Canadian company had some employees that were in India. They weren't meant to be there, but one of them was on a business trip and is now living in a hotel. And that individual is now going to probably stay there for about 3 months and work right from the hotel. So we've now got our affiliate office in India involved because they're now going to have to help the company with payroll obligations and also tax filing requirements for India. So very similar to the scenario where you're sent from a foreign country to Canada. If, let's say, you're in a situation where you've been put into another country that you weren't intending to be in, might want to start looking, have the company look at some of those obligations in that country if you have to stay longer than anticipated. Now, from a mobility perspective, I've had a lot of clients ask me, do I see kind of a change in the market? Definitely, obviously, the now, because we're kind of in this lockdown period. But I have heard from companies that we've got kind of regular calls with that, assuming this lockdown ends in the next few months, they'll go back to operations. Where we see companies that are in manufacturing or developing a product and they need to be in that other location, I don't get a sense that business travel or movement will go down. I think it's just going to be, where will that movement be? Will people now be working a little bit more remotely, depending on how long this lockdown period is? Will projects be delayed? Possibly, but again, I guess time will tell as to what happens. But definitely, if any of these sorts of issues come up, either for yourself or any of your colleagues, we're happy to help field any questions. We're also part of a group called Global Tax Network, so we've got affiliate offices worldwide. So even if you have a scenario where you've got someone going from Europe to the Middle East or from the Middle East to somewhere in Europe, and you needed services in that country, you can always reach out to Wayne and I, and we can help you locate the right professional that can help you in that area. So I'll turn it back over to Wayne and the team here, and I think we'll be taking on questions in a moment.
Yes, before you two actually be taking on the questions, we were hoping to put up a quick poll to have those, the attendees, if you'd be so kind to write a quick, there's just a quick poll. There'll be one right now between the Q&A, so you have a few minutes actually to write your questions. And we'll have Heba put up the poll, and if you'll find there'll be a poll coming up onto your screen. It's literally a 1-minute poll, so if you'd be kind enough, it'll be going on the screen in a few moments. I hope. Okay. Go ahead, Wayne, if you want to actually poll in process. There we go. If you could mind clicking on the poll, if everyone could answer a few of these questions, because these might also help direct some of the discussion that we're doing.
Okay, Diana, yeah, I'm ready. I'm ready to start. I see there's a Q&A come up.
Go ahead. Go with the Q&A. Do you want me to? You can see the questions up on the screen, I believe.
Ernie, those are questions for you. Do you?
Okay, so the ones. Hold on, let me just. Sorry.
I'll start with the first one from.
Sure.
M. Gerard.
Okay.
Okay, so I usually spend 6 to 8 weeks in Canada in the summer, half vacation, half working remotely. Is there any tax filing requirements? I mean, technically, if you are working remotely in Canada for half that time, then half that income would be considered Canadian income. That's the technical answer. You know, in this day and age, do a lot of people, you know, do some type of work when they're here? Yes. But yeah, so technically, if you're doing any work in Canada, then you'd have to file.
Okay, now I'll cover the next one. I'll just read it out loud. Do consultants or contractors that are based in Canada in Canada, I'm assuming working for a UAE company, create tax implications? Yes, it does. If the individual is performing services in Canada, even if self-employed, then they're still required to file a Canadian return. Then we get down to the question as to whether or not it's a resident return or a non-resident return. That's going to depend on ties, how long the individual is in Canada for. But a Canadian personal return would be filed, and there's a special form which is completed for self-employed individuals where the individual's revenues and expenses are reported, but personal tax would then be calculated as part of that filing. So, yes.
Okay.
Oh, then there's an extension of the question. It says, meaning for the UAE company, does it have any corporate tax implications? That's a good question. You know, if the individual is a consultant, so truly is independent of the company, then no, it does not have implications for the UAE company. But if the individual is seen or could be seen as an employee of the company, then there could be implications to the foreign company, depending on you know, what activity the employee is performing in Canada. So that'll depend on some things. So happy to answer more about that
yeah,
later.
and we have a corporate tax group, and normally what we do is the group will do an analysis on this, seeing, you know, whether the company is considered to be carrying on business in Canada or whether they have a permanent establishment in Canada, you know, what the potential payroll or other issues might be. So definitely happy if you want to talk about that further to get our corporate team involved. Okay, one more question here. I have lived and worked in Dubai for 15 years, have not filed taxes since I left, have not spent more than a few weeks on holiday once every year or so. Am I in trouble? So the answer to that question is no. If you left 15 years ago, then you'd clearly be a non-resident of tax for Canada for tax purposes. If you just holiday in Canada and you have no Canadian income, then you know you don't need to worry about filing or doing anything like that in Canada. So you're not in any trouble at all. Okay, so next question, if you own property in the UAE and you get repatriated this year, if the unit is sold next year, will you need to pay tax on the property? So this is a good question. So say you own a property in Abu Dhabi. What happens is that property gets valued as of the day you go back. So say you move back to Canada in June of this year and it's worth $1 million dirhams. Even if you bought it for 200,000 dirhams, that increase when you're a non-resident doesn't get included. So it's as if you bought it on the day you go back, and then you're only taxed on any increase. So again, if you bought it in June and you sell it in January of next year, if there's any increase in that 6 or 7 month period, you would have to pay tax on that. But that would be it. And so typically there wouldn't be much of an increase in a 6 or 7 month period. And then what we actually normally see is there was typically losses, because then you can factor in selling costs and things like that. So there might even be a loss in this situation. So it needs to get included on the tax return, and there are tax implications, but typically it wouldn't be that bad. Okay, so if you go back to Canada mid-year, would the personal tax credit be prorated, or you get the full amount? So if you go back mid-year, again, let's say June 1st, you're taxed on your worldwide income from that day forward. And then you get the personal credits from that day forward as well. So, you know, again, everyone kind of gets 12,000 a year, you would get half that. So the personal credits are prorated in the year you leave or come back. What accounts, okay, sorry, there's a bunch of questions here. Just trying to go through them. Okay. As a resident of Canada, can I use my apartment rent to decrease my taxes? If it's just a personal property in Canada that you're paying rent for, then no, you can't use it to decrease your taxes because it's just a personal expense. If it was for some other reason and you were using it for office or office space, then you could potentially write off some of the expenses if you had to use it. And in this situation, it becomes interesting during this period, whether people working from home, if they're forced to work from home, they can actually write off 3 months of their home office expenses. I mean, that's getting a little bit more technical, but typically if it's a personal expense, the answer is no, you can't write it off. Okay. When should cash or investment capital be moved back into Canada relative to the repatriation date, before, after, or does it matter? So this is a good question. So it really doesn't matter when you move the assets back from a tax perspective, because you're only going to be taxed on your worldwide income from the date you become a resident again. So it doesn't matter where your assets are. If you leave all your assets in the UAE and it earns investment income, then that investment income will be taxed in Canada if it's afterwards. If you move it back a little bit before, then if it's earning Canadian, dividends or something like that, it will be taxed in Canada as a non-resident rate. But typically, it doesn't matter. So it's really the residency date that triggers things. Again, these are just general answers, so please keep that in mind as well.
Wayne, sorry, I have actually a question. It's me, Diana.
Yep.
You said a lot of the taxes were, okay, we get to filing of taxes and whatever are getting deferred, which is lovely. Any news on city taxes? Let's say you've got apartments in Toronto and your city taxes, are they being deferred as well, or not that you know of?
I believe certain cities and some other taxes have also been delayed. I live in Toronto, I should probably know this, but I'm not positive, but I do believe some taxes are also being delayed just to help keep money in people's pockets for the time being, but I'm not specifically sure about that.
Okay, no problem, just curiosity.
Yeah.
A question that, and actually while you're looking at the other questions and people are filling out the polls, we were also wondering we will be able to send your contact information, therefore if people need to get to hold of you personally with more questions, they're actually, is that possible?
Yeah, for sure. Please feel free to share our contact information, and also to to send around the slides to whoever wants to see them. As you know, this is our very abridged version of the normal presentation we do, but again, I thought it'd be great to do a quick update. So.
Yeah, fantastic. And maybe in the future, near future, or far future, we could keep this as an ongoing basis, because I found the updates are very helpful. I think they're probably easier to digest with a little bit of information at a time. No?
Yeah, for sure. And I think it'd be great if we could do one on maybe not having a non-resident rental property or something like that, having property in Canada. So happy to continue to do little ones here and there. Yeah,
that would be lovely. All right, the poll is in process. Could you please take a few seconds to finish up the poll, because we'd like to see who our viewers are. And there will be one secondary poll right afterwards. Let's see. Can you see how many people have answered the poll already? If you have a good number, you could put up the poll results so that you can see who our audience is like, Wayne and Ernie. So you can guys, thank you so much. You're getting such great. Okay, we've got half of you who have polled already, or a third of you have polled. Could you please be kind enough to poll for one more minute? Is there any other comments that you two gentlemen would like to add?
Well, there's one more question I think that I'll answer here. It says, how long do you have to have worked outside of Canada to be considered a non-resident? And that's a really good question. That's one that comes up sort of all the time. Now, back I think when we first started about 20 years ago, there was kind of a 2-year rule, but they've got rid of that now. And so it's really about your intention and your ties to Canada. So obviously the longer you're abroad, the better. But in the example that I gave where someone was abroad for only 8 months and lost their job and had to go back, because they got rid of most of their ties and they intended to go abroad for the foreseeable future, they were still a non-resident even though they were only abroad for 8 months. Whereas we have people that can be abroad for 4 or 5 years, and if their family, the spouse and children are still in Canada and they still have a home in Canada, they're still residents of Canada typically. And so they could be abroad 4 or 5 years and still be residents. So it's not so much time specific as intentions and ties to Canada. And this is a perfect example. If you have to come back because of this, this is just something that's changed. And so again, if you were only abroad for a year, that's different than had you always had the intention to only stay abroad for a year. So
Fair enough. Okay, Heba, if you want to just show us the poll so people will understand what the next poll is like, so we can see the percentage of people that answered. This is all private, so don't worry about it. Can you put it up on the screen so you can see the poll? Thanks, Heba. I think it's also amazing, Wayne, that you and your company, Ernie, that so many people, yeah, please put up the poll. Let's see the poll first. Thanks. The answers. I think it's amazing that so many of your company can actually work remotely. I mean, we're all probably forced in a situation to work remotely right now, but the fact that the matter that you can see it happening, has it been difficult, or because of the fact that you have all this on cloud, in the cloud, all your work?
Yeah, thankfully we're all in the cloud. So, certain things, certain of our India team members don't necessarily have internet home, so they're hotspotting off their phone. And we just took over a company in Frankfurt, and they had a local server, and they wouldn't have been able to do anything. So, but fortunately we were able to get them on the cloud. And so it took a little bit of time to make sure everyone had computer in our other offices that we've had for a while, that everyone was able to do that. So it did take a bit of time, but yeah, it's definitely helped out to be able to keep things moving and try to ease some of the concerns about a lot of our clients. So.
No, I'm sure there's quite a lot happening. I mean, it seems that they do have some safety nets there for people in Canada, but I'm sure there's still a lot of questions happening. For you guys to see, no, for everyone to see, but just want to put it up. Just put up the poll that everyone can see.
So there's another question. I'll just answer sort of questions here and there
sure,
too.
Great.
Will we be sharing slides? Yes, definitely. One question was, what's the percentage of tax that you pay on the income abroad if you're working abroad but you're still a Canadian resident? And you pay the same tax rates as in Canada. So if you earn 100,000 in Canada, or you earn 100,000 in the UAE, if you're a resident of Canada, that 100,000 just goes on the tax return as any other income does, and you pay the tax at kind of the graduated rates, the same way a Canadian would on Canadian income. So that's if you're a resident of Canada for tax purposes. One says, if I work in the UAE, am I considered a tax resident in Canada? It really depends. If you have no ties to Canada, then you can be considered a non-resident. But to get out of the Canadian system, you have to make sure you file what's called a departure tax return to get out of the Canadian tax system. And if you haven't done that yet, then you'll want to look into that.
Fair enough. I think maybe the poll cannot be put up because we have the other media up at the moment. I mean, if you could actually do me a favor, can you stop sharing your screen, Wayne, and let's see if Heba can put up the answers.
Okay.
And then if not, it's okay too. It was just out of curiosity. So let's see. If it doesn't come, that's absolutely fine. So I think we'll just leave it at that. If there's any other questions, actually, there you go. There's the poll. So you can actually choose sharing the screen. So as you can see, Wayne, Leah says, do you file your taxes? So, okay, 60% file taxes, which is great to know. And
yeah, that's
thank
interesting.
goodness,
That's higher than I would have thought, actually, because I would have thought most people would already be non-residents. So it's interesting to know that. That many
maybe
people are
they
filing.
have properties
Yep,
as
that
a
could be it too.
non-resident. I think that's probably what they're looking at. And look at this. Isn't that good to know that they're using a tax specialist? I happen to enjoy that myself. Number 2.
Yeah.
So 41, what was it? Sorry, this went away. It doesn't matter. It's already. When's the last time you filed your taxes? Less than a year ago. So they're almost on the ball. Do you have a tax specialist in Canada? No, but from now on, you guys do have a tax specialist in Canada. I think that's the right answer. And can you scroll it to number 5 so we can see? So we have all the provinces in here. So the majority of the people that are watching today are from, we're looking Ontario, Quebec, Alberta, of course. And let's look at number 6. Okay, do you have taxable property incomes? In fact, look, there you go. Some of them are 30, 35. Some of them are not sure. So there you go. Fair enough. Well, thank you very much. I think we'll leave the other poll for another time. We'll send you a poll out with Survey Monkey so that we can get back some more information. And we're really hoping to have you back again very soon in the near future so that we can help reassure people that there are experts out there that, like yourselves, that can help us use the information, right? Is that the way to put it?
Perfect. All right. Well, thanks again
All right.
to both
Thank
groups.
you.
And,
Thanks, guys.
and we'll
Take
talk
care.
soon.
Stay
Okay,
safe.
thanks, everyone.
Talk to you later.
Thank you. Bye-bye.
Bye.
Bye.
Bye.